REA Group reported an increase in revenues for the half. However, net profit after tax fell 9% as it navigates falling house prices and higher interest rates. Revenues were underpinned by yield growth and advertising products, along with a strong performance from REA India, which grew its top line by 48%. CEO Owen Wilson continues to talk about the strength of its product and really talking about maximizing their campaigns. But, you know, you can't help but, realize that this interest rate environment will be a bit painful for the company. The company declared an interim dividend of 75 cents per share. So, REA Group, why would the market be taken by surprise by a downgrade coming from REA?
It's a little bit of a surprise to me as well. Why? Because we have been seeing in the press housing markets starting to fall. Most major capital cities, Sydney and Melbourne, are down sort of 15%. So you would think then revenues for REA and Domain would also follow that as well. So I think one of the big things that came out in the result was the increased costs, reflecting higher employee costs from wage inflation and continuing investment into strategic initiatives. So they've obviously had to increase their marketing spend as well as their travel costs as well, obviously with India and things like that going forward. So look, overall, I thought it was an okay result. Market obviously down today, so it's going to take a little bit of that in its stride. I overall think that REA is a fantastic business. If you go back to that chart, we sort of look at it and it does seem to be sort of at that sort of top end of its trading range for the last sort of 2 or a year and a half now. So look, cautious here. I'd say it's a hold at these levels. Wait for some more or better news coming out from the and you know, maybe picking it up at $100 or $105 might be a better play. So
you reckon it will go lower and you should wait?
Yeah, just looking at that chart, see it's tried to hit in 2022. It's tried to hit a couple of times and then fallen. So yeah, that shows to me that there's a lot of resistance to that 125 level. Okay,
what about you, Henry?
Well, it's a shame we didn't get the audio of that Domain thing, because although I didn't think in theory I was right, in practice I was wrong, because both of them are varied really hard in January, and that was in December, so I didn't get it right that well. This one, solid result. It is all about listings, let's face it. It is all about the activity for REA Group. It's the number of people that are out there selling their houses, and I think, you know, it's had a really good rally in January. It's a pretty solid result, but going forward, you would have to suspect that the listings are going to continue to be on the weaker side of things. Yep. People can't get the refinancing. They're not that interested in moving. They need to stay put. They may want to do renovations rather than moving, etc. And I think listings are continuing to be on the weaker side of things. So I think on that basis, probably more downside to come in REA as the market readjusts. But it's hardly a surprise, is it? You know, the housing market.
So do you sell it then, Henry?
Yeah.
It's a sell. Thank you. Okay, let's get to these.
You just wanted to feel useful, didn't you?
Yeah.